now got on board Nitin Rakesh, CEO, and Arvind Vishwanathan, CFO at Mphasis, to talk about how their quarter has been. Nitin, great to be having you on the show. Good morning, firstly. Let me start off the conversation with you. Was just looking at the quarterly performance. Tell me what's holding back the margin expansion, because it's been flat this quarter.
Thank you for having us. I think the short answer to that is that we decided to stay in a very tight band and keep the margins flat while we invest for growth in the business. So that's kind of the philosophy with which we are operating the business, and fairly pleased with the fact that margin stability is one of our cornerstones over the last few quarters. And as we feed the growth, I think we're fairly comfortable with where we are from a margin standpoint.
Nitin, also, if you can also give us a sense of the client demand currently. Are you seeing some kind of revival happening, especially in discretionary spends? And when it comes to AI and AI-led services, what is the kind of orders that you have been able to garner from there?
Yeah, I think client demand is a little bit more nuanced than the traditional discretionary versus non-discretionary side of the house for two reasons. One, from a macro trend perspective, client demand, client budgets on tech are not going down. In fact, there is a low single-digit growth in tech budgets. But the shape of that spend is changing to, quite in favor of trying to free up money to invest in new areas like AI. So from that perspective, efficiency and savings is very much a theme. But driving efficiency and savings by deploying new tech is actually even more important from a customer standpoint. So given the maturity of our client segment, the fact that we are dealing with some of the best names in enterprise, top end of the enterprise segment, especially between banks, insurance companies, airlines, and the like, I think the ability to showcase to a customer how you're going to give them efficiency while deploying a new stack, while helping them transition to a whole new AI fabric is kind of the name of the game right now. From that perspective, I think the pipeline buildup, the deal flow, the order book are all fairly heavily influenced by AI. Almost 70% of the pipeline today is AI-led or AI-influenced, where you will have to embrace some element of tech transformation using a new stack, embed an LLM into it, find ways to co-opt and adopt things like Copilot into it, try to shift left and eliminate manual operations when you're running production support, for example, and so on. So fairly, I think, an active space from an AI adoption standpoint, but still very early days when it comes to mass scale adoption of AI across the enterprise, for which the fabric is now being set up in most enterprises. And I think this will be a continued trend over the next 2 to 3 years.
Arvind, if I could get you in on the conversation as well, because your TCVs have slipped to about $528 million, right? What's causing the softness? Because you mentioned the largest ever pipeline also. So how quickly do you think it's going to convert?
Yeah, so two different questions there, right? So to be honest, we have done close more TCV in the last 2 quarters than we've done in all of FY25. So I wouldn't call 500 million a soft quarter. TCV, the nature of large deals is such that, it is lumpy by nature, right? And I would say probably in the last maybe 18 quarters or so, this is probably the third highest TCV wins in a quarter. We won about 6 large deals, a deal greater than 100 million, a couple of deals greater than 50 million. So in that sense, I would say we're quite happy with the kind of TCV closures we have had in Q2. And from a conversion standpoint, every deal has its own dynamics. Some deals have quick revenue conversion. Some probably take 3 to 6 months, depending on the transition periods and the nature of the deals. But that's an area of execution, and that's something that we are very focused on.
Arvind, also if you can give us a sense of what kind of cushioning did you get this quarter with respect to your margins, and how do you manage the entire Forex fluctuations that were coming through?
So from a Forex standpoint, we have a reasonably conservative hedging policy. So, it helps us through both rupee appreciation as well as rupee depreciation. So we did see some amount of flow through of Forex, I would say around 0.5% or so. We had an uptick in utilization, but it was kind of offset by some investments that we had made and resulted in a flat kind of operating margins, which is bang in the middle of our stated guided range between 14.75% to 15.75%. So, I would say in the range of where we want it to be.
Some of the verticals, BFSI, how is it looking? Are you seeing some kind of pick up in that vertical? And within BFSI, if you can speak to us about how the two geographies, North America and Europe, looking.
Yeah, I can take that. I think we probably were the first ones to call for a bottoming of headwinds when it came to our BFS business almost a year ago. We've grown our BFSI business at 4.5% quarterly growth rate for the last 4 quarters in a row. Growth was led by BFS and TMT for us. BFS still grew almost 15% in this quarter on a YY basis. Insurance actually grew 25+%. So I think the early adoption of AI will probably start with BFS and then get to insurance and other verticals. And that's kind of what's driving the growth in the early phase of this recovery that we've seen in the last 2 or 3 quarters. Outlook for second half is fairly positive as well. I think we will see almost all verticals contribute to growth. But clearly, the momentum we've seen in BFS, insurance, and high tech will continue to lead that for us over the next 2 quarters as well.
And come in here and talk about the kind of wage hikes that you may be coming in with. Have you already done it, or what kind of impact will it be there on your margins?
Yeah, I think our wage hike model is a little bit more dynamic in nature. We've linked that quite nicely to a gamified model where we reward employees for skill upliftment. So for that perspective, it's not in a single quarter, but we've kind of spread it out in a manner that we can tie it to employee upskilling as well. So no such thing to call out. There's no one particular quarter in which we will see the impact of wage hike. It's pretty evenly spread out throughout the business throughout the year.
Okay, Nitin, Arvind, both of you, thank you so much for your time today. Good to be speaking with you.
Thank you for having us.
Thank you.